Right guys, we have gold here breaking out. I'm gonna go long right now. Tuck my stops below the low, 29.16. I'm gonna tuck my stops over there. And we are looking for a 50 pip push on this to the upside. Expecting this to break out there. Looking for a pop up there, 29.25. Another one. I'm looking for this to pop up higher. My favorite higher from where it is. I can obviously cover the macro, cover the technicals, but the purpose of this video is to purely show you the entry model, how I'm going to manage my risk on the way up, trail the risk, trail the stops. This currently is a 40 pip stop on each position. So what I'm looking to do is, as the market goes up, I'm going to look to trail that risk. So essentially get risk free out of the trade as soon as I can. And what I intend to do with that free risk is then add it onto the trade, which will then allow us to maximize that upside potential on the position, again, by reducing our risk as early as possible. So we just need a pop up there. Let me show you on the 15-minute. If we breach the high, let me actually take one of these levels. If we breach the highs of, let's call it 29.21, then I'll be in a position to roll the risk and yeah, start adding, right? Start adding. So $200 there in profit. The minute we break 29.21, I'll roll the risk to the upside. So reduce the risk, take it off the table, so it's a free trade. And then use a partial of that risk that I had exposed, bring it back into the market, while only risking that new risk, so it's a free trade, right? And again, why do I do this? I do this to maximize my upside potential while minimizing my downside as quick as I can. Because again, that is something that you need to get used to in trading. As a trader, your best bet is constantly backing yourself in the form of reducing your risk, because that's what you can control. We do not control if gold has to spike down now 200 pips, I have my stops there. All right, so again, this is call it babysitting if you wish, but I need to babysit the trade if I want to get that upside. I could have one order on and just let it run, which is fine. If I'm busy, I will do that. But if it is the case of I have time to add to the trade, and that's exactly what I'm gonna do. So make sure you subscribe to the channel. I'm gonna be showing you and breaking down exactly how you watching this can do the same. And obviously, again, minimize your downside risk while potentially scaling in and adding to the trade. Some of the best traders I've spoken to with 20, 30 years experience, bearing in mind, I've only had 10 years experience and I still feel I have so much to learn, that their biggest trades have come from adding to winners. That's it. You know, it's not about going all in on your initial position, because let's face it, you could be wrong. And that is something you need to grasp very early on in the markets. And it's taken me a long time to get to where I am, but the quicker you make peace with the fact that you might be wrong on a position, it's gonna allow you to manage your risk effectively. So gold breaking out there nicely. I need us to break above 29.21, right? Keep that price in mind, and then I will be adding to the trade. So $480 there. 29.21, and I can actually start rolling my risk. And again, what am I doing now? I am moving my stop losses higher. So if I am wrong and the market does retreat and come back, then my risk is smaller and I've lost less. And again, I'm going to do that as the market goes up, so I'll trail my risk higher and effectively add to the trade so we can squeeze the market for everything that it has. So 29.21, I'll effectively have 3 positions break even, and then I'll be adding risk to the position, to the upside. So 29.21, if we have a 5-minute candlestick closure above that price action, that's when I will be adding to the trade. It's really trying there. If you look at this nice little trend to the upside currently, I know this is on the lower time frames. Obviously I have trading view on my right hand side to assist me with my bias. I have my macro view, I have my technical view. I know what's happening right now with the tariff war. I understand for myself, I want to position long. All of that aside, the purpose of this is obviously just to help you navigate scaling into the market, because that is so crucial. In my opinion, that is what's going to separate you from being a losing trader and a profitable one. So let's face it, if you have a 50% win rate and you're winning 50% of your trades, why not squeeze more out of that 50%? Because you might put yourself in a position where that little bit that you're squeezing is going to make up for when you're wrong. So try and keep that in mind. You can be wrong at any moment in a trade, and having that mindset really helps you. It's obviously not my best entry. Woke up a little bit late this morning. I could have definitely been long pre-London. Given what's happened, I was long yesterday. I did post a video up on YouTube, and yeah, we're long again this morning. Cup of coffee every day. I love my coffee. Looking for a bounce there and a continuation there to the upside. 29.21 ideally is the price we want. We just had a new 15-minute candlestick closure. Again, that is good. We need that. We might have a bit of pullback. And if it does pull back and stop us out, it is what it is. We will run with that. Not a problem at all. But I'm looking for that continuation to the upside. So a bit of a breakout trade that we're trying to catch right now. Let's see. This is Colombian instant coffee, Juan Valdez. Amazing stuff. Looking for a continuation and a bounce there. I mean, if we crack right now, we're probably going to get stopped out. Which again, grateful that I trailed the risk, because with this style of entry, this is purely a breakout trade. I want to catch it on the upside. I want to trail my risk, and if it goes, I obviously want to be a part of it. If it has that correction, not a problem. We'll review it in the US session, as I do every day. Let's see. Looking for that continuation and the breakout there. So look inside. I mean, yeah, it is looking good. Obviously stopped super tight right now. Currently we're about 14 pips, 10 pips away from getting stopped out, which again is fine. I've trailed the risk, I'm happy with it. And why do I do this? Purely to catch the breakout. And if gold has this explosive day, which it can, it is CPI today, so I don't necessarily want to be overexposed going into the event. But if I can catch something now and trail my risk, my job's done. I can walk away, I can go for a run, I can carry on with my day. So yeah, let's see. It is looking like it does want to break out there. We just need that break above 29.21. That will put me in about 30 pips profit. Again, I've got a couple of positions on now. So it puts you in a good position adding. If we break these highs, I will begin to trail again. Why is that? The market made a high. And with that said, if it has made a high and that high does get taken, obviously shows you that bullish price action, shows you there's buyers stepping in, then that gives me, you know, a swing low that I can now trail towards. So if we close above this high, 29.20, I'll start trailing to this swing low. There we go, price breaking. If we have a closure above, I can actually use one of these levels. If we have a closure above 29.20, you got 29.21 there for me to add, then yep, I will 29.20 and 29.21, and I will be adding to that. So to summarize, there you go, break above 29.20 and start trailing the risk below the swing low. And essentially what I'll be doing is trailing it even higher once we break 29.21. So yeah, thanks for watching. Make sure you subscribe. I'm going to be running through this on every position I take. More importantly, steps that you can follow, and check out my other videos, right? Make sure you check the links in the bio on how you can follow along, and more importantly, learn this for yourself, right? Super important and valuable skill. This isn't something that I was overly comfortable with doing when I started trading, but I understand now that, you know, if I am gonna excel and become that trader that I want to be, I need to be good at adding to my winners, and that's something I started doing quite aggressively, and it does pay off because, yeah, just minimize your risk on your initial entry and be willing to add as the market goes, and that is something that's going to be very fruitful for your career. So looking for a break there of 29.21, then I'll start trailing and add another position. Price is looking good there. 5 minute looking great. 15 obviously looking great, just made new highs in the 15. So 29.21 is the next price to beat. So just a little push up there. If we break above 29.21, what I'll be doing, guys, I'll be trailing the risk. And if we have a closure above 29.21, my last position, and that is it. And we'll look for 29.25 ultimately. Let's bring one of these. 29.25. So I can actually start trailing the risk there. And I will get my order window open. And I will look to add. So we need to close above 29.21, and then I will add the last position. Looking for ultimately 29.25. Seeing as price, if you actually go ahead and look at the chart at these levels, this is such a big level around this 29.25 price. I do expect us to just pop up, spike through, and yeah, by then we've already locked in gains. So a break of 29.21, and we will add. See, we're floating about $700 in profit right now, and this is where most people will say, oh, let me just take that. The reality is, if this is one of my winners, and what does that mean? If I have a win rate of 50, 60%, which again, it's not the best, but it's not the worst either, and this happens to be one of those winners, which falls into the category of 50% of my winners, that then means I've cut my winners short, right? Which isn't great, because the overall strategy and the way to become profitable as a trader is to let your winners run, to add to your winners, right? And if I can only do that, or if I don't do that, excuse me, and I cut this winner short because I'm scared, then it's just not going to work. But if I don't trail my risk, and this happens to be one of the losing trades of my strategy, then at least I've not lost the full risk that I went in with. So try and keep that in mind. This is purely a risk management style that I like if I'm at my desk. If I'm out doing something, I'll place my initial entry, put my stop in place, and I'll just let it run, or lock in gains as I wish, or roll my stops as I wish. Just try and keep that in mind. Looking at this, not great there on the 5 minute, obviously rejecting this area, but I do think if you look on the 1 hour and the 4 hour, obviously on MetaTrader you can't see that much, but I do think we'll just pop our heads into 29.25 there. Even if we continue higher, obviously I've benefited a lot by adding. Right, benefited a lot by adding. So if we have a break and closure above 29.21, I will trade risk more and add to the trade. So looking for a breakout there, 29.21. So breaking out there, 29.21. I'm getting distracted by my phone. 29.21. If we close above 29.20, I can actually start trading the risk really. So I'll cover 3 entries, and then I will be looking to add if we have a break and close. Let's get the order window open. So gold breaking out there, looking for 29.25. So if we have a closure above 29.21, I will add to the trade. Currently about 40 pips in profit, obviously across multiple entries, and I'm looking to add another now. There we go. So we've had that closure. I will add another entry there. I need to bring this down so you can see. There you go. So I'll bring the stops to this position, and ultimately looking for 29.25. So looking for one last little squeeze higher, and then we'll go from there. I won't be adding any more. I'm looking for the last 40 pips of the run. So what I will do now is just trail the risk to, I'll wait for this next candle to close, and we'll just trail the risk to the low of this candle. Can actually do it now. Oops, mistake. There you go. So again, what am I doing? I'm just trailing my risk. And yeah, looking for a continuation. I could technically add again, because I'm just starting to remove the risk really, but obviously for the purpose and the educational point of this video is not to show you to get greedy, but it's just a point of, okay, if you do remove the risk from the trade, can you be in a position to add that risk back to the trade if this happens, just so happens to be one of your winners, right? Because this could be a losing trade for me and wick me out, Again, I'm not going to be too flustered because I've managed the risk on the way up, and I've protected my capital. Right? Capital preservation over capital appreciation always. If you're new on your trading journey, I would just say to you, in your first year, try and not lose any money. I know that's going to be extremely hard because, you know, when you're in this game, your cost to be involved in the game is having capital at risk. I believe, you know, trading on a demo and trading a prop account is fine. I think prop accounts should only be traded once you've nailed down your strategy, which is great. But if you're new to the market and you're constantly be throwing money at these challenges, you might as well just trade a normal demo anyways. But with that being said, I'd rather recommend you trade $100 of your own money, $500 of your own money, because that's going to allow you to have some skin in the game. And having that skin in the game is going to allow you to make emotional trading decisions, which you actually need. You need it because if you're constantly paper trading and trading with demo, there isn't that emotional attachment. And what then will happen is you will go and you will have these big winning streaks on the demo. And the minute you introduce some live money, you're going to have a roller coaster of emotions that you're not used to. So start small, start with 100, trade 0.01, have a feel for it. Make a pound, lose a pound, but ultimately having real money exposed is what's really gonna help you progress as a trader early on. So keep that in mind. So gold breaking out there nicely. I'm gonna trail the risk some more there. Looking for 29.25. So if you have watched till now, thank you very much. Make sure you subscribe to the channel. This channel in particular is going to be to help you trade. I made a promise to myself that I'm going to make this channel into what I wish I had when I started. So yeah, follow along. Drop a thumbs up if you enjoy this, and I will be doing this more. So gold breaking out nicely there. 29.25. I will close all positions. Again, I could trail the risk, but we're 10 pips away now. So. Can actually, for the purpose of the video, just trail the risk to show you what I would do. Again, all positions now, well, one position currently is still exposed, but I'll lock in gains at 29.25. Great trade, 29.25. Thanks for watching. I will see you on the next video. Make sure you subscribe, check the links in the bio, sign up to my newsletter where I will be sharing tips and tricks, how you can improve on your trading journey. See you on the next one. Peace.